Let's jump right into this explainer on how builders can navigate the massive shifts happening in global finance to create truly sustainable wealth. We're drawing straight from the insights of Binance co-CEO Richard Tang today. If you want to understand exactly where money is going and how to build incredibly valuable infrastructure for the future, you are in the exact right place. The window to build the foundation of this new financial era is wide open right now, but it's closing fast. And the builders who act on these shifts today, they're the ones who are going to define the next century of wealth. So, picture this. Imagine this. Stepping out of a 31-year slumber, only to find out that the very foundations of how we trade, save, and value money have been completely upended. Richard Tang actually spent over 3 decades in traditional finance, working as a central banker and a regulator before he made the leap to the bleeding edge of the crypto world. When he transitioned from that notoriously slow, heavily bureaucratic environment into the borderless, instant realm of Web3, the contrast was absolutely jarring. He asks this exact question about a 31-year coma because the shock of seeing today's financial evolution from a totally fresh perspective reveals just how massive this shift really is. What's really fascinating here is that for decades, the pace of financial innovation was, well, glacial. Sure, you had slight improvements in credit cards or slightly faster wire transfers, but the foundational layer, it stayed exactly the same. Today, physical bank branches are literally being replaced by code, artificial intelligence, and blockchain. The core concept of what a financial institution actually is being completely rewritten from the ground up. It's no longer a fancy marble building downtown, it's a decentralized protocol living on a global network.
Section 1. The Great Financial Coma. Waking up to a new reality.
If we look back at the 1990s for a second, banking was honestly a massive physical pain. Opening an account meant taking time off work, waiting in line at a branch, sitting across from a loan officer, getting a physical passbook stamped, and relying on heavily siloed infrastructure. Fast forward through that kind of clumsy transition to early digital banking, and we finally arrive at the magic of today: instant, atomic settlement. Capital now moves across the globe in seconds, handled entirely on-chain without a single human middleman needing to sign off. We're finally breaking free from the slow, legacy systems that have choked global finance for generations. Section 2. Legacy banks versus future tech. The cost of inefficiency. Traditional banks have this massive, glaring failure. 1.4 billion people globally are completely shut out of the financial system. Why? Because the unit economics of legacy banking simply don't work for them. If someone only has $50 to their name, the administrative cost of maintaining a traditional account makes them unprofitable to a legacy bank, so they just get left out. But if you're an entrepreneur, a market of 1.4 billion unserved people isn't just a tragedy, it's the ultimate blank canvas. It's a dream scenario to create sustainable wealth by leveraging low-cost tech to bank the unbanked at massive scale. Say you're a founder trying to move crucial startup capital across borders to pay a supplier, and it hits 5:01 p.m. on a Friday. In the legacy system, your money is completely trapped. It sits in a clearinghouse all weekend, takes another 2 days to settle, and gets hit with massive fees. Crypto and Web3 completely tear those walls down. They let capital move seamlessly, 24/7, settling instantly for a fraction of a percent. The friction is just gone. To really put this into perspective, we are talking about $6 to $7 billion just vaporized by banking fees every single year in India's remittance market alone. That's money that isn't reaching the families and vendors who actually need it. If you're building today, look closely at this massive scale of waste. Redirecting this lost capital is basically the ultimate cheat code for building a billion-dollar business. If you can build a stablecoin or blockchain solution that puts that $7 billion back into people's pockets, you aren't just making a cool app, you're building a bedrock of sustainable wealth. Moving on to Section 3, Rise of the Web3 Wallet, Replacing the Bank Account. Think about the absolute headache of modern retail finance. You've probably got one out for your checking account, a different one for your stocks, another for retirement, and yet another for crypto. None of them talk to each other, right? The Web3 wallet changes all of that by consolidating your entire financial life into a single decentralized hub. Whether it's getting paid in stablecoins or investing globally in tokenized assets, it all interacts seamlessly right on your phone. The infrastructure of the future isn't a bank vault, it's a digital wallet.
And it's a totally serious question. Just imagine trying to explain banker's hours or asking a teller for permission to move your own money to a teenager 10 years from now. It's going to sound as ridiculous as explaining a fax machine or a rotary phone to a kid today. The next generation is going to view traditional bank accounts as obsolete, frustrating relics, simply because they'll be raised entirely on instant, self-custodial digital wallets.
Section 4. AI agents and new currency, the intersection of intelligence and money. This is a massive frontier for builders. We're entering the era of agentic finance. Imagine your personal AI scanning the market and finding a highly lucrative yield farming opportunity at 2 a.m. That AI cannot wait for the bank to open at 9 a.m., and it definitely can't ask for your thumbprint to authorize a wire transfer. It has to act autonomously. If you're an entrepreneur, understanding this shift is vital because the machines of the future require an entirely different set of financial rails to even operate. Let's actually do the math on why legacy payments fundamentally fail AI. Traditional credit cards charge a flat fee, usually like 30 cents, plus a percentage. Well, if your AI agent needs to make 10,000 automated microtransactions a minute, paying fractions of a cent to access different datasets, that legacy fee structure completely breaks the system. It would instantly eat up all your capital. That's exactly why blockchain, with its near-zero friction, is becoming the mandatory base layer for our AI-powered future.
But here's the catch. In decentralized finance, there's no safety net. There's no customer service hotline you can call to reverse a bad trade made by your AI. While this tech gives you incredible freedom, it also demands ultimate personal responsibility. For builders, this is a massive opportunity. Creating sustainable wealth means building the very risk management guardrails, the automated kill switches, the strict parameter limits that will keep these autonomous agents from draining a user's life savings overnight.
Thankfully, it's not all just risk and spending. AI is also an absolute powerhouse for defense. In just 1 year, Binance used over 100 different AI models for anti-fraud scanning. It acted as a tireless 24/7 security guard that saved users from nearly $7 billion in potential scams. AI can recognize invisible fraud patterns across millions of transactions in real time, stuff a human team would literally never spot. Builders need to realize that robust AI integration is the ultimate shield in a world without central authorities holding your hand. Section 5. Building Sustainable Wealth Today, the Builder's Blueprint.
So how do we actually do this? There's a sharp line between grifters chasing overnight hype and real builders creating long-term infrastructure. Tang's blueprint is super clear. Don't just launch a random meme token hoping for a quick exit. Instead, really research the landscape, understand the underlying tech, and build apps that provide undeniable, long-lasting utility. True wealth generation right now requires rigorously combining AI and blockchain to solve actual, painful problems for people.
Honestly, every single economic sector is ripe for this. Take supply chain financing, for example. Right now, it's bogged down by weeks of delays and missing paper invoices, but if you inject blockchain for instant tracking and then layer on AI for instant risk assessment, you suddenly unlock millions of dollars in efficiency that was just lost to bureaucracy. That exact process of unlocking efficiency, that's where massive wealth is generated. Like Tang says, sustainable wealth is never an accident. It's the direct result of giving people better, faster, and cheaper tools that actually improve their daily lives. Utility is the only long-term driver of value in Web3. If you focus relentlessly on utility, building something people fundamentally need that makes things cheaper or more secure, the financial rewards and the wealth creation are going to naturally follow. And this is absolutely crucial. If you're going to build the financial rails of the future, you cannot rely on secondhand knowledge or Twitter summaries. Ultimate financial freedom requires you to verify everything and take absolute ownership of your education. In a decentralized world, there is literally no one else to blame if you don't understand something. You got to put in the time, ignore the noise, dive into the white papers, and be the master of your own money. So as builders construct this incredible new architecture of digital wallets, stablecoins, and AI agents, I'll leave you to ponder this. Is the era of traditional banking already over? The raw tools to build unprecedented, sustainable wealth and to fix the inefficiencies that have plagued our legacy systems for decades are sitting right in front of us. The only question now is, what are you going to build with them?